Today I will be calling cable. My name is Wakar Meyer and I'm your Elliott Wave analyst, reviewing what has been and predicting what is likely to be in cable price action. So I thought I'd start this episode off by talking about these Fibonacci support and resistance lines. Resistance lines are the ones you see in green to the upside, support are the ones you see in red to the downside, and the ones that you see on the chart right now are based on monthly price action. So for the price action that happened in May, I just took the high, low, and the close, did the calculation, and got these numbers. Opening price is always in this channel, and then whenever it confirms to the upside or the downside, confirming meaning that it breaks that level, that kind of just tells you to where the bias is. These are not perfect, and I would never use these to I would never use these solely to trade with, but they are a nice, helpful indicator when you're not sure about the other stuff. Because by the other stuff I mean the count, but the Elliott Wave count. But as you break these levels, the odds of it getting to the next price level decrease in that given period. Now, it can still happen, but it decreases. Based on some studies that I've done, when it breaks the first level, it has about an 89% chance of getting to the next level, and it has about a 25% chance of getting to the final level, this fifth one up here, when it breaks the first level. So anyway, I just wanted to give you a look at these, and as you can see, the, uh, the resistance zone that I had originally been talking about, thinking that, okay, the E wave's going to come back to this zone, is the ones that I'm marking here in yellow. So you can see that if it's going to make that zone, it's probably going to go all the way to, at least past, what is that, R3, maybe as far as R4. So I'll go ahead and take those off for now. But now so still looking for the movement up. I'm looking for it to, at the very least, take out this A wave and ideally run up close to this 5790 level. But let me go ahead and zoom in and look what actually happened as we were moving into the close. So I was calling this point right here 1. It made A. I believe it made B. B was very close to a 138 throwover, just a little bit more. And now, well, the last episode I said it would fall, and it did. So that makes me think that I'm on the right track. But this particular wave down right here that I'm calling 1, I'm having a hard time counting that as 5 waves. It's just not working for me. So what I think is going to happen is I think price is going to continue to move down, and that it's going to basically make a diagonal. So you're going to see price kind of move down in a wedge, and that will complete too. And I would expect that wedge to take out this A terminus here, perhaps come close to this support line, but perhaps not breaking it. It might be something more like this. And I just kind of draw that as if it's going into midnight. You'd get this wedge pattern moving down, and then as the prime time for trading happens, while there's crossover between Asia and Europe, I would expect it to then break to the upside. So, and once again, I think I said this in the last cast, but you would then connect the origin of 1 wherever the terminus of 2 is, and then you would move that up to the terminus of 1. A break of this trend line would likely signal the up direction, right? And that would be the start of our third wave of C. So that's today's call. I hope you'll join me again for tomorrow's call.